Hello, what has been the trigger of this session? Is this fascinating new requirement of the Income Tax Act, primarily in a more robust avatar as compared to the earlier annual information return, where now the department has come out with even further stricter rules with respect to reporting of high value financial transactions. Now, how does this impact me as a taxpayer? Is that once these high value financial transactions are going to be reported to the department by these specific persons, I'll have to ensure that if I have actually breached the triggers, I also take due cognizance of these transactions in my financial statements which are submitted to the authorities, so that there is no mismatch which further brings my case into scrutiny and might have penal consequences for me. So there are some taxing time aheads where banks, businesses and professionals to report high value transactions by 31st of May in each year. Same is forex dealers, property registrars, NIDIs, NBFCs are also covered under this reporting rule. They've excluded salaried persons from the ambit of this reporting obligation. And now tax officers are reaching out to bullion dealers, stockbrokers, luxury good merchants, and are ensuring that anyone who goes for inaccurate reporting pays a fine of 50,000 rupees. Under the new rule 114E of the income tax, all assessees who are liable to tax audit under section 44AB will necessarily have to file form 61A capturing statement of financial transactions in case they receive cash of 2 lakh rupees or more for sale of goods or services of any nature whatsoever. So whether you are a doctor, a lawyer, an engineer, an architect, a bullion dealer, 2 lakhs or more, you need to report it. Now, a mismatch is going to happen in case the data that you provide in your income tax return does not match with the third party information on your income or investments or expenses, and that's where the catch is. So these third parties will be people, that is legal entities that you deal with on a daily basis: banks, mutual funds, service tax department, sub-registrar of properties. Now it's being very vigilant, and so now we'll try to understand how the department receives this information, who provides this information to the department, what are the incomes that are reported or kind of transactions, and what is the list of high value transactions that's reported to the department, and can you actually check the high value transactions that are reported to the income tax department against your PAN. So what is the list of high value transactions? As far as the list goes, any high value transactions and cash receipts beyond a certain limit will have to be reported to the department with effect from the 1st of April. These include a host of transactions: cash receipts, withdrawal, purchase of shares, immovable property, term deposits, mutual funds, sale of foreign currency, and so forth. And this is going to be in form 61A. So SFT has been made mandatory within the ambit of section 285BA, where under rule 114E of the income tax rules 1962 you will have to do this. This was previously known as annual information return, and in case you have reportable transactions as an entity, you'll have to apply for something called ITD-REIN, that's the income tax department reporting entity identification number. So in case a bank has a customer who makes cash deposits exceeding 10 lakhs or more in a financial year in one or more accounts, this excludes the current account or time deposits, it needs to be reported. In case there is cash deposit or withdrawal aggregating to 50 lakhs or more in a financial year in one or more current accounts of a person, this comes in the ambit here. In case you make a cash payment of 10 lakhs or more in a financial year for purchase of bank drafts or prepaid instruments, that's what will attract this thing. And banks or NBFCs like HDFC or Shriram Transport Finance, when they have deposits aggregating 10 lakhs or more in a financial year, but this excludes renewal deposits. So in case I have a deposit which matures during the year and then I choose to auto renew that amount will not be coming under this 10 lakhs of limit. So this will also include deposits or withdrawals made in post office account, credit card payments. So in case you are making 1 lakh or more in a year in cash payment of your credit card obligation, or 10 lakhs or more through checks or NEFT transfers, beware, the department is watching you. In case you invest in bonds and debentures of 10 lakhs or more from any person, again this is like excluding the renewable part of the bond or debenture. So in case I've got a bond or debenture which matures during September of this year and I choose to renew it, this amount of the renewal part will not come into the ambit here. In case I invest 10 lakhs or more from my accounts into any company for acquiring shares, including share application money. Now this share application money is interesting because this has been used often for money laundering by a lot of smart tax professionals. Buyback of shares. So in case a company has a single person from whom it buys 10 lakhs or more of shares during the year, is going to report that. Mutual funds. Now here, if a company receives 10 lakhs or more from a person or investor in a financial year for acquiring units of one or more schemes of a mutual fund, that's okay, other than the amount received on account of transfer from one scheme to the other. So if I switch out of one scheme and switch into the other, that will not come into the picture here. Now one doubt that I have, which I keep asking my fellow professionals, is whether multiple investments into a liquid fund and withdrawals and investments, so each time I make a liquid fund deposit into a mutual fund liquid scheme, will that be clubbed and this trigger of 10 lakhs is going to be taken, or the net investments over a period of 1 year is going to be taken? That remains still a matter of deliberation. And if any entity has sold 10 lakh rupees or more of foreign currency, whether it's a prepaid exchange card or a debit credit card or a traveler's check or a draft or any other instrument, you'll have to report. So next time when you go abroad and you buy foreign currency, remember that there is the department watching that Europe tour of yours. So when you come back, do file that in your returns. Immovable property. In case you purchase or sell any property of an amount of 30 lakhs or more, or you got transactions which are valued by the stamp authority as referred in section 50C of the Act at 30 lakhs or more. Now cash deposits during 9th November to 30th December also come into the picture. So banks will have to deposit those transactions where in case of a current account you've made 12.5 lakhs or more into the current account, or in case of an account other than a current account, 2.5 lakhs. This is during the period 9th November 2016 to 30th December 2016. And for this same class of people, the bank will also have to report cash deposits during 1st of April 2016 to 9th of November 2016. So if you got stuck here, your history from 1st April to 9th November will also necessarily have to be reported by the bank to the department. All business establishments including jewelers, car dealers, banks, companies. So if you pay 3 lakh rupees in cash for purchase of a car, you need to inform the tax department that yes, I have received 2 lakh rupees in terms of payment for sale of gold, etc. SFT regulations are going to cover any person who is liable for audit under section 44AB of the Income Tax Act, relates to audit of business or professions. Now in addition to the above list, quoting your PAN number is now mandatory for many financial transactions. Even if you eat in a restaurant for amount more than 50,000 rupees, the department is going to track your returns. What's the use of SFT then for you? You may be wondering, okay, these people are reporting, so what's in the deal for me? What you need to be aware of the information as pertains to your SFT and reconcile the details reported there with your form 26AS. In case you find anything amiss, you should take immediate action to bring it to the notice of the income tax department, because the department is going to work on the discrepancies it notes between what you file in your return and the information that it captures from these SFTs. So in which report can I capture this? You check your form 26AS, that's the same under the AR section, which has now been replaced by SFT, and you'll find it in part E of your form 26AS. Now this is how it happens. So Just Dial Limited is the AR filer, and it says okay, transactions of code this where I'm acquiring shares of more than 1 lakh rupees. Now this is the previous thing. I'm just showing you a screenshot of how each and every transaction is now reported by the department. So few tips are: always better to file your ITR before the due date. Cross check all the TDS entries in your form 26AS. You may repeat this exercise once in a quarter. Check your form 26AS if any transactions are reported under AIR, now called as SFT. Keep your bank details up to date. Disclose the entire income that you've earned during the financial year in your ITR, and keep a record of all your high value transactions, investments and expenses, because the department is watching. Thank you.